Good morning and good afternoon, everybody. Very welcome to the second session of Mastercard EEMEA Crypto Week. My name is Andrea Prazakova and I lead Mastercard Foundry for EEMEA region. And I am your MC for today and the next two sessions as well. As this is day two, I would like to know who was here maybe yesterday. Do you want to tell us in the chat? I know that people are still getting into the room. It would be lovely. Please do tell us in the chat if you joined us yesterday as well, if you have repeat customers. So really great to have you. Today, we will be unpacking a really interesting topic of decentralized finance. Oh, great. Shahin is here. Great to see you. Tomorrow, we will be debating how can we enable safe and compliant crypto payments using CipherTrace. And on Thursday, Kamran and I will do a big deep dive into central bank digital currencies. So yesterday, our audience was super busy in the chat commenting and asking questions. So please don't be shy and put all your questions and comments in. We will try to answer everything in the session on the screen, or obviously Kamran and Ashok will try to attend to your comments in the chat. So allow me to take a little bit of trip back in time before DeFi. So the financial system as we know it today, I mean, it went through a series of technological advances. The earliest attempt making banking more efficient came in the 1920s with the introduction of accounting machines and punch cards. It was like, a serious technological invention. Then in the 50s, of course, the computers came in, which significantly speed up each of the transactions, and the revolution came with the introduction of ATMs and credit cards. And of course, with the internet age and computerization of finance, that got then supercharged. I personally clearly remember all of it and all of these changes. So I'm just thinking, when I started to work in Austria in 1993, I still remember how customers came into our branch every morning to pick up their bank statements, which arrived in the morning from the central printing activity like 1 hour before we opened. This today, it's completely unimaginable, right? I think for all of us. Just, tell me if you still remember the time or if you're just too young not to remember that. Where today we are so used to it, to have a bank in a palm of our hands, to do all the transactions in our hands. Today we require smooth interfaces, fast processing, but we are still dependent on a certain number of certified players in the system. That's where DeFi come and will bring our financial systems to yet another wave of massive revolution. And Kamran and Ashok will help us to understand how. So without further delay, please allow me to introduce to you today's panelists. Some of you met Kamran yesterday. Kamran is based out of Dubai. Welcome back, Kamran. He is our EEMEA blockchain and digital asset guru. When you ask him, he always says that, he really.
So we'll just give Andrea maybe a minute to come back. Why don't Ashok and I sort of introduce ourselves while we're waiting for her? So as Andrea was just saying, right? So I am based out of Dubai. I look after everything blockchain related for the EEMEA region. I'm very, very passionate about everything to do with crypto and blockchain. As you guys would have gathered yesterday, I'm a little bit of an NFT enthusiast. I also happen to be a DeFi enthusiast. And I'm always looking for how blockchain can basically take the existing space forward. Right. Ashok, over to you.
Thanks, Kamran. So yeah, that's great. So basically, Kamran is my twin out there in Dubai. I mean, we do pretty much the same thing, but my passion is very different, right? But I think I came in from a banking, from a capital markets, New York Stock Exchange kind of a background into the space. My ultimate goal of getting into crypto was kind of buying an olive farm in Spain, but it didn't work out that way. But here we are, a few years later, still kind of hanging on to that dream. But really, really passionate about some of these areas because aside from all the cartoon characters in the NFT space and some of the other things that people are really excited about, the key about this thing is that it really does solve some real world use cases, gets people included in the space, which they just didn't have access to in the past. And we'll go into that in more detail in our spiel today.
Thank you. I could see that, Kamran and Ashok filled in while I got disconnected on my 5G. So Ashok, let me keep you on the screen and ask you, what questions probably everybody's burning to ask. So first of all, welcome to Dubai. And can you tell us what is DeFi?
So let me, you kind of gave a little bit of a history lesson, right? So let me just kind of not take it back that far back, just taking it back like 15 years ago. For most people who just invested in equities, right? So the way you had to do it was actually had to go to a broker and actually buy equities or bonds or whatever you had to. 10 years ago, you could go to E-Trade or Ameritrade or any of those little discount brokers and actually own stock on your own. Today, as Andrea, you pointed out, you can pretty much do everything on your phone itself. And that's what really DeFi has really done, right? It is a decentralized financial kind of a ecosystem where you can actually have access to any kind of financial tools at your disposal without going to the traditional like a bank or a brokerage or an insurance company. There's multiple functions which are available to you in a decentralized manner. So if you want to get a loan, you don't necessarily have to go to a bank. You can go to a peer-to-peer environment. You can go to a liquidity pool and get a loan. You can buy insurance from a group of people who've put money together to create their own little insurance company. Now, what this does is creates access. You don't have to have go through a KYC AML process or even have an ID to get some of these features. So what it truly does is elevates people, gives them access to financial services that they didn't have in the past.
It's really fascinating how you describe it, Ashok, and almost reminds me of some of these saving initiatives which were known in the 50s, 60s in Austria, Germany, in Africa, and many other places. Now, Kamran, if you think about it, why is DeFi really gaining such a big popularity?
Well, it's a very fascinating development, and Ashok touched upon a very, very important aspect of it, which is access, right? And Ashok touched upon a very important part of aspect of access, which is you don't necessarily have to undergo KYC in order to get access to these services. But I'll actually take it a little bit beyond that as well. So today, for a lot of people who are wondering, how can I make a good passive income through investment? When they start to do research, as I did a few years ago, you very quickly learn that the really lucrative investment schemes are locked to you, right? You need to be an accredited investor, or you need to have a certain amount of money already in the bank in order to be able to access the higher rates of return. Whereas, for most people who have, let's say, a few $100s to invest, or even less, or maybe even some thousands of dollars to invest, you're locked out of all of that. And you have a very small set of things available to you, which really are not that lucrative in terms of return, right? And so one of the things that decentralized finance is doing is it is bringing a lot of those products that typically have been denied to the retail consumer and making it available to retail, right? For the first time. For many people, it is the only way they can access an earning scheme. Even people living in third world countries who do not have access to banking relationships, if they have a little bit of money put together, they can get access to crypto, they can start earning. So this is one big requirement. The second thing is basically, what are the earning rates that these schemes are giving? Now, DeFi is a space fraught with risk, which we'll discuss a little bit down the road. But if you look at the earning schemes, right, even on the conservative side, you're looking at 10%, 15%, 20% returns. Then when you start getting into slightly wilder spaces, you're looking at hundreds of percentage points in terms of return on an annual basis. When compare that to any of the traditional saving schemes available through certificates through the banking sector today, it blows them out of the water, right? And the numbers themselves attract people to the space despite the risk. And number three, which is also very, very relevant, has been very relevant, especially since 2021. We saw a flavor of this with the whole GameStop situation. There is an increasing perception of unfairness and inequality in the existing financial system, right? People believe that the system is rigged against the smaller investor. With GameStop, people for the first time started to be introduced to the concepts of dark markets, after hours trading, right? They first of all, they got to hear for the first time that when you're trading stocks and things like that, you can only see the trades you're putting in. But an institutional investor can see everybody's trades, exactly what value they're putting in, and therefore they have this unfair advantage. Whereas decentralized finance solutions based on the blockchain, everything is there. The order book is open for absolutely everybody. Everybody has equal access to information. So that's what it is.
Listening to this, and if you look at everything you said and the research which is out in the web, actually, decentralized finance should be rebranded to democratized finance, right? Because it gives real access to everybody and the visibility. And I think that's an enormous power in the system. So Ashok, bring it home to us. I'm sure that the audience is asking now after Kamran explained it, what are in short, the most common DeFi services?
Well, I mean, there's, I just want to add to a couple of things Kamran said, right? I mean, like the ability to earn those returns. I mean, they are fraught with risk. So, but that is mitigated by the availability of this information. So there's transparency of the information that you have, which allows you to do this additional level of research when it comes down to how you should get involved in some of these DeFi protocols, right? Now, and to answer your question about what's going on, what are some of the things?
Right. What are the services?
So I mean, there's the most common ones are services that most people can get access to in ways of say financing, right? What we normally see is that small medium-sized businesses have really difficult time getting financing at a reasonable amount of time and a reasonable amount of cost of capital, right? Because of the fact that for the type of businesses they're in, the type of produces that they're moving around, the risks are higher. Like let's say if you have a small trader importing perishables, or somebody importing things from which are food products, or meats, or some of those things, a lot of traditional banks don't want to touch that, right? And more importantly, traditional banks don't want to touch some of these areas which are below a certain amount, right? Say below $5 million to $10 million, because they just don't make enough money, right? So there are those type of services and ways of liquidity pools for a loan, right? So you have one side of funding those liquidity pools where you can actually earn from it, and the other side is actually taking money out of those liquidity pools that you can actually use it for, to pay your bills, working capital, all of those things, right? Then you can have insurance type of schemes where a group of people can get together and offer insurance type services. You could always also have investment services which are there, where you can buy and trade kind of like DeFi type ETFs in there to do that, which you have access to pooled funds which are giving you returns. So a DeFi could be anything that is available in today's market. And now we're actually getting into more of the derivatives and options and so forth as well. A lot of things that today, like current financial systems are used to, but this is in a very different space, because now you're talking about cryptocurrencies, you're talking about those type of things instead of traditional FX rates, right? The movement of these cryptocurrencies is a lot more volatile and a lot less controlled than, say, a foreign currency which moves up and down, right, based on supply and demand.
When you think about the lending fees, because I think that many of the audience members probably have a consumer loan or a mortgage or a car loan. Can you and I can see there are 4 questions popping, which is really amazing. Can you bring it maybe 500 feet down now from the topic of lending and say, if Andrea is a consumer, right? So she will have 2 options. She either goes to her existing bank and goes through the rigor of applications and all of that, and when the time comes, the loan is approved. How different would the experience for me be in the DeFi world? Where would I go? How do I apply? Can you bring it home in that sense?
Surely. So I mean, so let's imagine for a moment, Andrea, you are a small business owner in Dubai, right? And what do you want to do? You want to sell fashion? You want to sell something? Pick an area that you want to do. What's your store?
You look at me as a woman, and fashion comes first. So
it's automatic there, right?
I know, definitely. So let's do fashion. Okay,
so now you have a fashion boutique where you're importing fashion. So you may have a designer who's sitting in New York. You may have fabrics coming in from Africa or from Asia that are being put together, right? Now all of these things put together, and imagine that you've got invoices that you have to pay for because you're buying goods from these items, right? Now, at the end of the day, if you have the funds, you can actually pay for it. But many small businesses don't necessarily have funds readily available to pay these bills immediately. They've literally you invested the money into assets, which is really going to make the end product, and those end products are going to be sold. And once they're sold, you actually make money. So now imagine you need to get a loan for say $250,000 to run your business for the next 3 months until all those goods that you make are sold, right? Usually you'd go to a bank and apply for it, and the bank may take 6 to 8 weeks to process your loan and give you an approval. Now, if you only need the money for 3 months and you're already 8 weeks in and you still don't have the money, you're a little unhappy, right? So imagine what I'm giving you is a DeFi protocol. You go to the same kind of institute, you go to a peer-to-peer lending area, and you say, here are all my invoices, which I'm going to collect on in a matter of 3 months. Can I borrow against my invoices today? And I'll give you the interest rate or more or less what the bank will charge you because I have availability today, right? So now this DeFi pool will look at the invoices. They'll do a little bit of background check to make sure that you have paid your bills in the past. That's where kind of Mastercard comes in to kind of provide an overall trust to say, okay, Andrea is a good risk to have. Now that is not dependent on background. That's determined by, like, say, smart contracts, which goes back and says, well, we know she's paid all of her bills within the allocated time in the past, so she's a good risk, right? Now those particular invoices are tokenized, and then we borrow against a liquidity pool using those tokenized invoices as collateral, right? Now you've got your money within 72 hours. You're able to pay your bills and run your business. And when your invoices get paid in 3 months' time, you repay the loan back to the DeFi pool plus expenses and interest, and you keep what's left over, right? So, I mean, obviously that's a very simple method.
Yes. I think it brings it alive really great, and it fits so beautifully into my next question, because if I'm the entrepreneur, of course I would be so excited, but there are also probably people who will try to rig the system. So DeFi itself, obviously there are a lot of risks and challenges. It's a new technology which automatically come with those. Kamran, can you connect it and talk a little bit about the risk and the challenges and how that is managed? Because now you got me excited as a SME, but there are many who would like just take the money and run away. How is this protected? And I'm obviously oversimplifying it, right?
So let me start with one or two facts which are probably going to get people even more excited, but those facts are in the service of how you mitigate the risk, right? So I think I'll get away with it. So first of all, like anything blockchain related, for decentralized finance, everything is visible and transparent, right? So I will tell you that as of this moment, there are $213 billion locked up in different types of DeFi platforms at this very second, right? I know that because all the data on the blockchain is transparent, and there are now solutions out there that have all of this on the dashboard right there in front of me, right? That kind of visibility. And to give you an idea of how DeFi has grown, in January of 2021, so we're just talking about a year and a half, a year and a quarter ago, the total amount was 17 billion. So we've shot up from 17 billion locked up in decentralized finance to 213 billion locked up in decentralized finance in the last 15 months, right? So all the risks which I'm about to mention, they're all there, but clearly something is still attracting a huge amount of investment into these spaces. Now, what are some of the risks that are available? A lot of these are actually quite common amongst all types of decentralized crypto-based initiatives, right? You will see some of these risks pop up in NFTs as well. So obviously the most obvious risk we can talk about is, because these are decentralized solutions, usually there's no registered company behind them. Therefore, whoever set the solution up, sometimes that person will abscond with the funds, okay? And this is what we typically term as a rug pull. We see rug pulls in the NFT space all the time. We see rug pulls when people use their own coins, and we see rug pulls in decentralized finance as well, right? So that's a very, very common all crypto. But then there's a few other things which are specifically DeFi oriented, which are very interesting, right? So these are risks that don't materialize because somebody has evil intent. These are risks that materialize because these products are a little bit complicated and people don't quite understand what they're getting into. The simplest one, you put your money into a decentralized finance earning scheme. Okay. And the earning scheme is giving you your profit in a cryptocurrency. So you're earning profits in that cryptocurrency and you're very, very happy. Maybe what you're not tracking is how many US dollars does that, what's the US dollar exchange rate for that particular cryptocurrency, right? So you're very happy for 3 months, then one day some bad news comes out and that cryptocurrency crashes. Okay. You still have that much cryptocurrency, but now it's worth a lot less. And all of a sudden your profits are eroded. So the volatility, as it is elsewhere in crypto, and this is being mitigated by having a lot of stable coin-based earning schemes coming up now. Right. Second thing is you have this thing called impermanent loss, which is a complicated topic, but I would just advise anyone interested in decentralized finance to look into this. And it is a complicated topic. So if anybody wants to hit me up or Ashok up afterwards, we'd explain it as well. But it basically is that there are some types of DeFi schemes where your principal is not protected. You put your principal in, you're earning fantastic profit. When you take your principal out, sometimes you get less than your full principal back. And there are reasons for this. People just don't understand why it happens. So they get surprised. And then you have something called flash loans. Now, this is not really, shall we say, again, something with evil intent, but it's a feature of decentralized finance, which can be exploited. And people are still figuring out how to make it safer. So flash loans are interesting. On blockchain, because it's a 24/7 network where things happen very, very fast, you can automate anything through smart contracts. So imagine this, you have the ability, let's say that you spot an arbitrage opportunity. Okay, there's one crypto exchange, it is selling Bitcoin at a certain price, and there's another crypto exchange where Bitcoin is at a slightly higher price. You see an opportunity to buy Bitcoin from here and sell it over there. Right? And you could make a good profit. But the thing is, you don't have the money to buy the Bitcoin, so you need a loan. A flash loan is a kind of construct where I can go to a DeFi pool, okay? And I can borrow $1 million, $2 million, use that to buy Bitcoin here, sell Bitcoin there, take my profit, and then pay the $2 million back in one transaction that takes place in less than a second, in a single transaction, right? And because it happens in one transaction, therefore, there is no really upper limit. So clever people, because all of this is happening through code, clever people have figured out that flash loans are a great way to suck money out of some unprotected ecosystems, right? So you will hear recently about this DeFi platform called Beanstalk, where $182 million worth of funds were siphoned off through a flash loan in less than 1 second. Because somebody very, very clever figured out how to do that through code. Yeah.
And on one side, there is so much of excitement, but the risks are definitely there. As we spoke about the solution itself, I think one cannot get rid of that feeling that DeFi could ultimately replace the traditional banking system as we know it. I want to really ask both of you is, what should the bank do and how can the bank benefit from DeFi rather than fear it as a competition? Ashok, you want to go first?
Surely. I mean, a lot of people talk about the fact that banks are going to go away, right? And, Andrea, you're talking about when you first started that, you were printing out statements. But the banks are still here. They're not printing out statements anymore because they're making things available to you on your smartphone. But the banks are still here and they have evolved, right? What we're seeing with our customers, with our clients, is that they are beginning to evolve slowly, but they are beginning to evolve. So a lot of banks are looking at getting involved in these DeFi protocols, either as lenders or borrowers, right? So if you think about, say, the wealth management group within a bank, right? These are like the ultra high net worth individuals who are looking for investments with high rates of returns. Now, they have always been a source of funds for any type of investments across the bank. So either they're funding investment banking protocols, or they're giving out loans, or doing all kinds of different things to kind of grow their wealth. So these DeFi protocols are really attractive to them for funding purposes. So you could actually have wealth managers like the Julius Baers, the UBS, all of those guys potentially coming in and providing these liquidity pools for funding purposes, right? On the other hand, you could potentially have these institutional banks which are looking for funds for large projects, building projects, or roads, or ships, and so forth, go through that lending and borrowing pool as well. Also, you've got insurance companies which can get involved in these pools, because insurance is another key area where you can provide this liquidity for short term. Because what you're doing with insurance is that you're paying a very small premium for potential. If there is a loss, then you can get a payment back in a large scheme, right? So there is opportunities for both banks and traditional institutions to continue to play in this space. Very different than what they're doing today, but very similar. But they're going into these lending pools rather than sending money into a traditional environment.
Kamran, how do you see that? Looking at from a bank's perspective, how does it benefit me on top of what Ashok said, and what can I actually do better?
So I think one of the things is competition is always good, and competition is always healthy. What we've seen, not just with decentralized finance, but we've seen across the fintech space, is fintechs come out with these innovative new solutions which nobody has really thought about before, and they're initially perceived as a threat. Over time, those solutions get adopted within the markets, and then what we very often see happening is that the fintechs and the banks realize that partnership together is beneficial to both parties and provides the best possible solution to consumers. I see something similar developing along, decentralized finance. You made a very good comment earlier that perhaps we should rename it from decentralized finance to democratized finance or something else, because there are as many centralized finance solutions out there now as there are decentralized finance solutions, right? We are seeing quite a few banks already starting to look at this space, right? So these algorithmic kinds of systems. So just to give you one example, right? If we have the kind of algorithmic system where I can come in and it's a trading platform, right? Now, typically a trading platform like a Binance, they need to have large amounts of Bitcoin on hand to allow people to trade the Bitcoin on their platform. So they have to buy that Bitcoin from somewhere. So the costs of setting up kind of like a cryptocurrency trading platform are quite high. You need to source the liquidity. Now, there's another way to do this. You ask people to come in and add to the liquidity pool. You peer fund it or crowd fund it rather than buying it yourself. And then when everything is traded, you keep a little bit of cut for yourself because you're providing the platform, and you give a cut because they're adding liquidity to the platform. This is in fact one of the earliest, and for me, my favorite of all of the DeFi solutions that are out there, because it gives you consistent earnings based on volume. Now, this is a new pattern of doing it, right? Banks have picked up on the fact that these kinds of things actually work. They are able to study the way the code is happening, and they're able to replicate it and add the necessary controls that they need around it. And because the costs of operating these things are typically on the lower side, you don't need that much manpower to do it. They're able to start addressing a new segment of customers. So this is one thing that we're seeing. Another thing that we're seeing is, of course, the concept of banks partnering with fintechs that are this kind of thing as well. And then lastly, from the perspective of payment service providers, there's some very simple things we can do in terms of access to these services. Just like we discussed with NFTs yesterday, if you want to benefit from these services, you need to acquire crypto. If you want to take out your profit, you get it in the form of crypto. So there are lots of opportunities there for me to, for example, go to a liquidity pool and fund it with my card, okay, so that the crypto conversion happens and I don't have to worry about it. And then when I want to withdraw my profits, have the profits automatically converted to fiat currency and deposited to my card, to my bank account instead of investing. So these things, I think, providing easy on-ramps and off-ramps will become more and more prevalent. And I think there's a lot of opportunity for the banking sector and the traditional finance sector there as well, right? Plus a lot of new innovation that is going to come in the space. And Ashok touched upon some more advanced things that can be done over here as well, which I'm sure about a little bit.
before we go into the case studies and the examples which you brought with, which I'm really, really excited about, it. I think I cannot, I kept thinking about one area, which is the human capital and the knowledge in the market. I think that because the DeFi knowledge is still quite limited, right? If I look at it, I think that there seems to be that going forward, there will be also a big opportunity in terms of DeFi consulting to financial institutions and to other organizations because of that. I know we didn't agree on the question and I slipped it in, but I would be really curious how you're looking at it, because there's a really limited number of people at this point in time, like it was with blockchain, but it still exists. But DeFi is an additional level, how do you see that shortage, obviously, that opportunity which the banks have? On the other side, there is this shortage of skills on the market around DeFi.
So the answer to that is very similar to the answer for the rest of crypto, right? And Andrea, you gave a very good example yesterday about how your son has launched an NFT project, right? So a 12-year-old is very comfortable with technology that appears mysterious and hard to get into for people of an older age group. Decentralized finance is very, very similar, right? A lot of the decentralized finance solutions which are out there, which sound so complicated when we describe them, are launched by teenagers.
Yeah,
I can guarantee you.
That's a really great point. Yeah.
I'm on some of the development groups, they're launched by teenagers because they're very, very comfortable with reading code. The interesting thing about these decentralized finance offerings is that the way they work is transparent. You need to know how to read code. You don't have to ask anybody for permission or anything like that. The exact logic of how it works, the pool where the money is stored, and every single transaction that is happening is all right there. And you need to be able to go there today and read it. I would greatly encourage, both for this aspect and also for the risks aspect we discussed, everybody on the call to really attend tomorrow's session as well, because I think what Jan will talk through tomorrow with regarding cipher trace and the ability to trace through things, that kind of solution will contribute a lot towards taking all of this information that's there but difficult to sift through, and organizing it and packaging it and presenting it in a way that people can immediately see and digest and start to learn from. So that knowledge gap is going to gradually decrease. And there are skills out there. They're just not available in your traditional spaces. You're not going to find those skills amongst your typical degree carrying college graduates. You're going to find those skills amongst the people who hang out on Twitter, hang out in their basements, and who are coding smart contracts for fun. Skills are out there.
I love it. I think that this is really answering well, and I hope it's sending the message into the universe that it really breaks also the barriers in the traditional recruiting. Ashok, do you want to add anything before we go into the case studies on this topic? I can see you.
I was just kind of talking about, worried about the stereotype of sitting in the basement for some of these developers. I've seen some of these developers which are sitting in high rises but not really in basements. But no, I mean, it's true, right? But I think the code which are out there, I wouldn't say they're simpler, but I think it's just you have much more access and transparency. So therefore, you do, and it's always the case with new technology, right? Initially, you have a high demand of people or high demand for people, and then slowly that kind of normalizes because they find access in other areas. So normally you wouldn't look at like say teenagers in basements to help you code, but the whole decentralized area, you don't necessarily have to have a bunch of developers sitting in an office working for you. Right?
Yes,
You can actually farm out pieces of work depending on how they are, and each of them could be working on their own little piece of code and kind of plug it together for everything to work together. So I think that's the really interesting part about this whole blockchain space.
Yeah.
So now I know
that. Just a point because this actually is in service of one of the questions I think we got in the chat as well, right? For decentralized finance and anything else crypto related, right? We've talked at a high level conceptually about how banks can start doing it. I think it might be worth just spending a minute on what kind of an ecosystem is developing that the banks can take advantage of, right? So what we're seeing more and more on the NFT side, on the payment side, and also on the DeFi side is that you're going to eventually have banks, crypto players, traditional payment networks, non-traditional payment networks, all of them playing a role. in rolling these solutions out. And some clear roles are emerging, right? So for example, there are well-regarded firms out there now that are in the business of simply auditing DeFi smart contracts. Okay, so looking at those smart contracts, examining the code, testing it out, and making sure that all the vulnerabilities that allow money to be stolen and things like that, those things are missing from it. There are now companies out there which are ensuring decentralized finance pools in case money is stolen, so that some money reparations can be made to the people who invested. Banks are more and more contributing their knowledge of how to implement better lending schemes, but banks can't custody crypto for the most part. So you're seeing this rising wave of crypto custodians that basically that's the place where you park your crypto funds. The banks are the ones that provide the intelligence. There are platforms which can be centralized platforms or decentralized platforms that you can connect into. So all of this is building in the way of ecosystems, right? And there was a question in the chat about what kind of a roadmap can banks adopt in order to introduce these kinds of services to their customers. Now, roadmaps will vary market by market, but the general thing is looking to build out these partnerships with trusted players that are starting to emerge and ideating with them on solutions, just the same way you're doing for the rest of the fintech sector, right? And obviously it's a bigger topic, but that's definitely a conversation we can have.
So Ashok, can you walk us through a couple of the real examples with real customers around DeFi?
Surely. So, we have a couple of projects going on. I can't name names because they're not public yet. But the first one is, as Kamran mentioned earlier, about the ability to off-ramp out of your DeFi protocol, right? So obviously there's two pieces of it. How do you fund a DeFi protocol? I mean, let's take a simple one. This is a purely a staking or an interest earning DeFi pool, right? So in the past, somebody wanted to put money into the DeFi pool would either have to go to an exchange, buy cryptos, and then move those cryptos into this DeFi pool where they can actually earn from staking those tokens, right? But then now what we've done is that we've had the ability to actually use a card as an on-ramp methodology. So you can actually use your card to fund your wallet, and then from there you can move it into a DeFi protocol and earn funds, right? Something which Kamran touched upon earlier. And similarly, what we've also done is that we put this card on the wallet itself, where if they want to spend their earnings from this DeFi protocol, I mean, not touching the principal unless they want to, so they can go to any of the merchants that Mastercard has accepted in across the world and spend the funds which are in the DeFi protocol without having to cash out, right? So they tap the card, their $100 worth of goods is automatically taken, and the DeFi protocol is short $100 and paid to the merchant, right? So it makes it easy for on-ramping and off-ramping purposes. So a very simple real-world use case that we've put into place out here, right? Then slightly complicated. This is kind of going on your store story, right? Where we're working with a bunch of buyers and sellers in Australia, which export food products to the rest of the world. Everything from avocados to meat to dairy products, a number of them. Now, these farmers are around their normal invoices are around 250,000 to 500,000 US dollars, right? A very kind of the middle size for most of these invoices, very difficult area to get financing in that space because the traditional bankers don't want to touch it, right? And more importantly, traditional bankers sometimes don't want to touch perishable goods because the potential for loss is very great, right? So what we did was we brought them to a DeFi pool. And what Mastercard does is that it does payments triggers, where we've got conditional program smart contracts, which will tell the DeFi pool when these payments need to be made. So let's assume for a moment this particular shipment is going from, say, Australia to Singapore, and they want the payment to be made when the shipment is halfway between Singapore and Australia, right? That can be coded as a smart contract, and then when that condition is met, that payments trigger is sent to the DeFi pool, and the DeFi pool will send the payment directly to the beneficiary, right? In the background, what happens is that these invoices are tokenized into an NFT, and that NFT is used for minting digital currency, right? That's what you actually use. So you're not. So what we're really solving for is real world problems using a DeFi pool, where a farmer isn't able to avail himself uh, of capital in timely manner, and also with a affordable cost of capital, right?
Yeah.
Uh,
I really like it how you described the, utilizing the NFT for the invoicing, because yesterday, obviously, we've been talking about all the different parts of NFTs,
yeah,
art and events tickets and all sorts of things. And I really like this, way to showcase that NFT can be used for something which is truly practical and in combination with smart contracts to enable these farmers to get paid on time and obviously maintain their own businesses, right? Where financial institutions don't really want to go into it.
exactly. So I mean, I think a lot of people see NFTs as, I mean, they do add value when it comes to, say, your art or your music. It gives a platform to uh, artists which may not be mainstream who want to have a platform, right? Similarly, musicians who are not mainstream who want to have a platform, they can NFT these assets and actually get it out there. But if you look at other things that you can do with NFTs, these are some of these areas where you can actually tokenize your accounts receivable, you can tokenize your invoices, you can tokenize anything, right? So, and you can make it into an NFT. That way ownership becomes easier. So something which Kamran mentioned before was that if you have $100 in your pocket, now you can avail yourself of a lot of these services which you couldn't do so before, because you can actually buy a piece of it rather than having to buy the whole piece, right? So
So how did this example change the life of these farmers? I think, obviously you described the process. What did it change for them in terms of their liquidity or any other parameters?
exactly, you kind of hit the nail on the head, right? So basically now instead of waiting 6 weeks to get a loan, they're able to get their funding in within 72 hours. Now with that, they can actually potentially expand their operations, get ready for the next round of pieces, and they're not waiting for the settlement of the whole trade to happen to actually have funding. So it creates working capital for them to kind of expand their business for the next round, and allows them to kind of grow their business and build upon it. And then these DeFi protocols are available because there is utility. There are people using it, and it continues to expand into providing liquidity for so many of these different areas. Now, Mastercard plays an important role where, one, they provide the payments triggers to make sure those payments are done. It provides trust, and it provides a way for them to off-ramp these funds using our rails, so that way once it hits the farmer's account, they can pay their downstream vendors and suppliers as well using our card rails.
Amazing. Kamran, we obviously spoke about what the role the banks can film and in the DeFi, but Ashok, can you take one more question from me? Is you touched a little bit on what Mastercard is already doing, with some of project, but what else are we up to, which the audience could benefit of in our region and beyond?
Obviously, there is the on-ramping and off-ramping capabilities. We are also, we're working very closely with our customers, right? So our banks, our merchants, for the ability to accept payments in some of these digital assets. And you touched upon it briefly as well in ways of consulting. So we've got our whole DNS services where we're actually supporting them to build out and really prioritize some of these use cases. Say, how do you really engage? How do you really create a DeFi pool, or how do you access a DeFi pool? What are some of the potential risk factors that you should look for, and what are the mitigation strategies when you come into play of really developing some of these DeFi strategies, right? So we've got a number of things on the product side. We've got a number of products around triggering of payments. We've got on-ramping and off-ramping capabilities. On our services side, we can touch upon our consulting areas. Then we can go into analytics to really say, well, why is your DeFi pool not performing the way it is, right? Are you reaching the right target market? What can you tweak to really get to that next level where you want to be, right? And then Kamran also touched upon the security aspect. I'm sorry, Kamran, I don't want to steal your whole thunder there. So, we've acquired a number of companies, CipherTrace to be one, which can actually do transaction monitoring, which can tell you, what are some of the transactions which just happened, where the transaction is coming from, where the crypto is coming from that have been staked in the pool. Have they been used or acquired from some kind of illegal activities? So a bunch of different things that we can do to kind of provide a holistic service to our customers and our clients and our partners, right? And it isn't like you have to do everything. It really depends on what is important to you and how we can come out and help. We truly are a services company to really have our customers succeed.
Amazing. Kamran, do you want to build on it?
So they don't call Ashok my twin for nothing, as you guys can see. And so Ashok, I think, did a really comprehensive job of covering what we're doing, right? Looking a little bit further ahead to the more experimental side of things. One of the things that Mastercard would be looking to build for the future, obviously, is that as these different payment networks and transactional networks start becoming more mainstream, you'll have your traditional payment networks, you will have blockchain-based networks. There will obviously be a need for a network of networks to easily bridge between them, right?
Yes.
So sending money from a bank
interoperability.
To interoperability, exactly, right? Now, in the context of DeFi, what kind of a role does interoperability actually play? I've had conversations with central banks where one of the things that they are interested in exploring with relation to central bank digital currency is that, hey, if we are going to take our currency and put it on the blockchain, then can we somehow safely enable the currency holders to use that currency to and deposit it into a DeFi pool that might be on a different blockchain, for example, and draw profits from it back into our payment network, right? So it becomes a way of earning and things like that. Those are, I think, some of the more experimental things that we're now starting to flesh out as we're having more and more of these conversations. We talk about interoperability all the time, right? I think what has been lacking in the past is concrete use cases that interoperability serves beyond just the transfer of value. And I think DeFi type solutions, because these sprout up all over the place. Decentralized finance, by its very nature, you're going to have some centralized finance services which maybe are offered centrally, but a lot of these services exist on the Ethereum blockchain, right? Which is by far the biggest at the moment, on the Solana blockchain, on the Binance Smart Chain blockchain. And if you want consumers to be able to access select services on those blockchains using, let's say, a government issued digital currency, again, that interoperability becomes extremely important to enable all of these scenarios to take place. And things like cipher trace become extremely important to provide that end-to-end visibility across the information that is traceable. There were questions, in the chat about all these frauds happening. One of the things I would like to raise is you can't hide on the blockchain, right? You can abscond
that's the beauty of it.
Carry out a flash loan. You can carry out a flash loan, but you read the articles. The minute it happens, people know about it. They know where the money was taken out of. They even know the wallet that the money was put into, right? And then when and now the person who's stolen the money, he has a challenge. How does he drain that wallet and convert it into usable money and stay invisible, right? It's not that easy anymore. That's where the transparency of the blockchain comes into play as well. So that would be another reason where more and more of these services might shift over to this kind of paradigm. And interoperability, I would say, to put the icing on the cake on top of what Ashok said, would be very, very important. Cross network.
There was one more question in the chat from Ashraf, which I think we missed, and it was more around, building the history around credit risk decisions and the data. I think that, and we didn't touch on it. Do you want just to take that, Kamran, quickly to say,
Sure.
How do we build the history? As you've been describing the functions of DeFi around credit risk decisions.
Yeah, and thank you for pointing that out. I did see that question, right? So the thing is, there's lots of different types of lending that happen within DeFi. Many of those lending patterns are peer-to-peer lending patterns. So lending is not based on any kind of analysis of credit history there, right? Lending is purely based upon the fact that, hey, I'm lending a small amount. The other person is also on the same blockchain, and smart contracts are going to basically take care of the fact that I get my money back, right? And there's a little bit of risk associated with it. So it's a slightly different paradigm. Now, when we come to the more corporate type of lending things, There, one of the things we've talked about in the financial inclusion space for some time now is that blockchain is one of the best ways for somebody to build up a tamper-proof digital transaction history. Right. So you have a loan product which is slightly, shall we say, which requires a good amount of credit history analysis. Then people, even without bank accounts, who have crypto wallets and they've been transacting with those crypto wallets for some time, their entire transaction and balance history is there on the blockchain, available for analysis. Yes. Tools can be used to basically put that. Loans they've taken in the past and their repayment of those loans in exact detail is right there.
You can see.
And that kind of digital footprint, which starts building up on the blockchain, is actually one of the things that a lot of people who are exploring the space are very, very excited about, particularly for the financially excluded, because that's the only digital trail that they have. And it now start applying for loans.
And also for many countries who don't have credit bureaus, this could be almost like a leapfrog alternative, right? To jump into a blockchain. So we are a couple of minutes before the session. Oh, sorry.
Maybe if I could just add to that piece, right? I mean, like, yes, what Kamran said is true, right? So you've got all this information in the blockchain, but we also have these oracles out there which you can tap into. So these smart contracts can kind of go into these oracles, these third-party sources of data, where I can create a complete persona which will have all of my history, everything from where I went to school, where do I own my house, all of those details are also stored. So it kind of creates this digital profile which I can tap into and kind of carry with me to provide this information that I can guarantee you that the loan is going to be repaid, right? And then the digital identity is a really interesting space as well, because I really believe that data is something of value, right? If somebody wants to use my data, I should get paid for it, right? So so if you really look at it, like, as you're exchanging some of this data, which is available to you, smart contracts can pull it from multiple sources and truly create this the sense of trust that yes, the loan which is going to be issued is going to be paid back. And this is why I feel that, because of so much information I have backing it up, not just what's available in the blockchain, but also what's available outside of it.
That's a really great point, and I like that you brought in that digital ID functionality, because I think that will become even more powerful going forward. So before we close off, I have a question for both of you. If I am today a payment player in the market, what would be your advice for me to do not to stay behind on this topic? Ashok, you want to take it first?
Wow, this is a tough one, right? I mean, like, there's so many different things that you can do.
Last question is the toughest.
I know. I mean, so like, I think the lie that the cryptos and the stable coins and all of these things are coming it's a lie. It's already here, right? So I think people should really need to prepare of how do they begin to accept some of these things into their ecosystem, right? And that's one thing. So prepare to kind of accept these things, and then tap into the knowledge which is available very freely, right? Because I think the blockchain DeFi community, one thing I've seen is that they're very, very generous when it comes to sharing their knowledge, right? So tap into what's out there to really prepare yourself to see how you want to incorporate these things into your ecosystem. And you don't have to take a leap. You can actually take components of what's out there to make things successful, right? So I think that's one thing. And also, reach out to experts and at firms like ours, which can kind of help and guide you implement a solution which is the right fit for you.
That's a great point.